Welcome back to Smart Stock Sam. I have something special to share with you today. Remember when I told you Palantir was about to explode? Remember when everyone thought I was crazy giving calls of all in before earnings? Well, buckle up, because today we're breaking down exactly how that prediction played out, and more importantly, why this story is far from over. If you've been watching my channel, you already know that I don't just throw darts at a board. I analyze, I strategize, and I share exactly what I'm seeing. Today's video is going to walk you through one of the most exciting calls I've made on this channel, show you the proof in the numbers, and reveal why Palantir still has massive room to run. So if you want to understand how to spot these opportunities before the crowd catches on, you're in exactly the right place. Let's dive in. Just a few days before Palantir's earnings report dropped, I published a video with a pretty bold stance. While the market was filled with uncertainty and plenty of skeptics were calling the top, I laid out my case for why this was the moment to load up on shares. I identified specific entry zones between $125 and $145, and I didn't just throw out random numbers. I gave you precise trigger points at $138 and $130, where I said I'd be a heavy buyer. This wasn't guesswork. This was based on solid technical analysis, understanding market sentiment, and recognizing when a stock is coiled like a spring ready to launch. And here's what happened. Palantir tested that $130.50 Fibonacci support level like a textbook setup. The stock had just gone through a brutal 38% correction that had shaken out weak hands and created doubt across the market. But for those who understood what was really happening beneath the surface, this was the opportunity of a lifetime. Within days of hitting that support, Palantir staged a nearly 5% rebound to $135.90, fueled by news of strategic partnerships that validated everything I'd been telling you about this company's positioning. That precision, that ability to call the bottom of a major correction, that's what separates noise from signal in this market. But let's talk about why this wasn't just luck. Let's talk about the fundamentals that made this such a high conviction play. When Palantir reported fourth quarter earnings, they didn't just beat expectations, they absolutely crushed them. We're talking $1.41 billion in revenue, representing 70% year-over-year growth. Now, in the software world, there's something called the Rule of 40. It's considered the gold standard. You add your growth rate to your profit margin, and if you hit 40, you're doing great. Most companies would kill to achieve that. Palantir? They scored 127. Let that sink in for a moment. This isn't just outperformance. This is rewriting the entire playbook. And it's not like they're sacrificing profitability for growth either. Palantir has now delivered 9 consecutive quarters of GAAP profitability. They're sitting on a war chest of $6 billion in cash with zero debt. In an environment where interest rates have crushed over-leveraged companies, Palantir is operating from a position of absolute strength. This gives them the flexibility to invest aggressively in product development, pursue strategic acquisitions, and weather any market storm without breaking a sweat. Now, what really gets me excited about Palantir's future is their dual-engine growth model. They're not dependent on a single revenue stream. Their U.S. commercial segment exploded with over 130% year-over-year growth in the latest report. We're seeing major corporations like Tyson Foods and Hyundai moving beyond pilot programs into full-scale implementations. These aren't experiments anymore. These are mission-critical deployments where Palantir's platform becomes the central nervous system of massive operations. At the same time, their government business grew 66% to $570 million in the fourth quarter. This provides a defensive floor of predictable sovereign-level income that's incredibly sticky and resistant to economic downturns. Here's the thing that makes Palantir truly special and why I've been so bullish. Their ontology layer creates what I call a strategic moat that's basically impossible to cross. Once Palantir gets embedded in an organization, they build a digital twin of the entire operation. They become the intelligence layer that connects every data point, every process, every decision. The switching costs become astronomical. You can't just rip out Palantir and replace it with something else without completely disrupting your business. This is why their customer retention is off the charts and why revenue expansion within existing accounts is so powerful. After earnings, Wall Street finally started catching up to what I've been telling you. Dan Ives at Wedbush, who's one of the most respected tech analysts out there, maintained his outperform rating with a $230 price target. He literally called Palantir the Messi of AI. Jefferies set a $208 objective. HSBC upgraded to buy with a $205 target. Morgan Stanley lifted their target to $205 as well. The consensus target right now sits at $192, but even that feels conservative based on what I'm seeing. And just when you thought the momentum couldn't get better, on February 6th, Palantir announced a strategic partnership with Cognizant to roll out their Foundry and AIP platforms across Cognizant's healthcare and business process operations. This is exactly the kind of catalyst that triggers institutional buying and confirms the thesis. The market responded immediately, helping fuel the rebound from that 130 support level I told you to watch. So, where do we go from here? Because here's what matters most. Despite the recent correction and the rebound we've already seen, the upside potential remains absolutely massive. We're on the cusp of what analysts are calling the agentic AI wave. This is about AI systems that don't just assist humans, but actually execute autonomous tasks at scale. Projections suggest this could drive Palantir's revenue growth to 70 or even 80% by 2026. And from a technical perspective, if Palantir reclaims that $175 golden ratio resistance level, it could invalidate the entire bearish correction pattern and set up a move back toward the all-time high of 207.52 and beyond. Looking at the bigger picture, Palantir isn't just riding the AI wave. They're building the infrastructure that makes the AI revolution possible for enterprises and governments worldwide. While everyone else is still experimenting, Palantir is in production. They're the ones turning AI from a buzzword into actual business value. Conservative estimates are projecting 60 to 80% upside from current levels, and honestly, I think that might be understating the opportunity. This is Smart Stock Sam, and this is exactly why I do what I do. I identify these opportunities, I share them with you in real time, and together we navigate this market with clarity and confidence. If this breakdown helped you understand not just what happened with Palantir, but how to think about identifying these setups in the future, make sure you hit that subscribe button and turn on notifications. The next big opportunity is always around the corner, and I'll be here to break it down for you. Until next time, stay smart, stay patient, and keep building that wealth.